Hey guys, welcome back to my channel. This is Sam, your favorite loan broker. Guys, this video is about a mortgage product that banks offer, right? In order for individuals to buy a home, right? And as you know, my channel is about how does the person that is living check to check, that's trying to figure out how to save money and how to get ahead, right? And you're wondering, is there something out there for me? Little do you know, there's a whole bunch of options out there, and I'm here to educate you guys already. Now, if you don't know, I'm a loan broker. I work with different banks, different lending institutes, different mortgage companies, right? And I can guide you on getting the best option for your situation. And at the same time, I'm here to educate you on different documents you need in order to buy a home. Now, you hear all the time you need 3.5% to buy a home. That is just not given to everyone. You must qualify in order to get that, guys. One, you have to have 2 years of working experience or 1 year of self-employed income proof showing that the banks look for in order to give you that 3.5%. And besides the 3.5, you can actually get less, right, guys? Guys, also, my channel is about the person that is working minimum wage or $5 over the minimum wage that want to know, is there an option for them to buy a house? And not only that, how can they forward their financial future, right? Like, how can they add some real significant income? And when I mean significant, 50,000 to 100,000. Now, I don't know if you've been following my other videos. My channel is about educating you guys on why you should buy a house now, right? Now, I'm gonna give you a small little option that's actually out there, but a lot of folks don't know the requirements you need in order to get that, right? So guys, don't forget, there's going to be two information given here. One on, hey, why are you pressing me to buy a home right now? And how does that benefit my financial future? That's one. And also a mortgage product that the banks offer that helps a lot of people buy a home if you understand mortgage math, right? Let's jump into it, guys. All right, guys, let's dive into it, right? The mortgage product that I'm referring to is a down payment assistance program and closing costs program, right? Now, what is that, right? It's where if you do not have the down payment, the bank allows you to bundle it into your mortgage payment and your closing costs. They allow you to bundle that into your home value or your approved value to buy a home, right? What does that mean? Now, let's do an evaluation of a home value 500,000 times 3.5%. That gives you $17,500 a borrower or a person will need in order to put down on a house that's that's $500,000, right? Now, let's do closing costs as well. There's the down payment aspect of it, and then there's the closing costs for paperwork and fees and county transfers and lawyer fees, right? So that'll be anywhere from 2 to 3%. Don't quote me, guys. It depends where you're at in the states and the county fees for that, right? So that'll be about 2%, right? So now that's 10,000 plus 17,500. Whoops, 17,500, totaling 27,500. Now, this product that I'm referring to about that I would like a lot of people in a situation that doesn't have 27,000, 28,000 laying around, and I want you to buy a house now, right? The benefits of that. Now, let me break you down why the bank even has this program in a sense of they're not covering the cost. What they're doing is they're taking this dollar amount and adding it onto your home value to where it'll be added into your mortgage payment, right? So now, guys, let's do an evaluation, right? As you know, I like to go to Mortgage Loan Calculator, and this is a particular website I like to use, right? Now, let's do that value I told you, right? Let's do it 28,000 just to simplify. 28,000, and I'm moving this around. This website that I'm on is actually to calculate home values, right? But now I'm gonna calculate how the banks use it in order to do that 28,000 that I'm referring to, right? 28,000, 1% down. The loan terms, which is how long you have that dollar amount / this price value added on to your mortgage, 30 years. Now, let's go a little higher for that. As I'm filming this video, whoops, As I'm filming this video, mortgage rates is 6.1, 6.5, etc. But it's right at that 6, right? So now, in order to get that value, in order to get this product, what banks do is they add on 1%, right? So it's 6% at the time I'm filming this video. Let's add on 1% for that, right? Because the bank wants to get their money and compensate it for that, right? Now, like I said, this calculator that we're using is to do mortgage math calculator to see what the bank charges you in order to do that for you, where the bank is putting the down payment for you and adding it into the mortgage, right? Now, there is no property tax on that dollar, but let's just put one there just to hold the place value for the calculator. No home value. Let's do 120. PMI, no 120. HOA, no. Take this all out, right? I do property tax. And guys, every product, every dollar amount that the bank lends on, they have insurance on it. So that's why I put property tax 120 and home insurance 120 for the 28,000 that I'm trying to make an example for you, right? Now, if you look at it, total out of pocket, let's round that up, is $200 on a home that's $500,000 at a 7% interest rate, right, guys? Guys, what I'm trying to educate you on is if you don't have 5% or 3.5%, which is $17,000 to put down on a home. And mind you, remember, I'm telling you to buy a house now, but you're looking at your pockets and like, Sam, I don't have $28,000 to put down to buy a home. There's an option to where the bank will take that $28,000 and add it into the home value. You don't need to put it down. You don't need to have it. But now that money doesn't disappear. What the bank will do is whatever your mortgage would have been, they will add on $200 onto that. Now, let's do a calculation on a home value. That's $500. I mean, 500,000, right? Bring this back to 6%. Where is it at? Down payment. Now, down payment, I want you guys to put 3.5% or less than that. If you can take less because of your situation, take it, right? Property tax, we're going to come up with a property tax because I don't know who I'm talking to and where you at across the state, right? But just to simplify, I'm going to do 5,000. 5,000 property tax, homeowner insurance. Take this with a tablespoon of salt, guys, because I don't know where you're at. If you're by water, if you're by fires, if you're by a racetrack behind you. So home insurance is different. It's kind of like car insurance. Homeowners insurance, let's put that at 1,900. PMI, if you're getting a FHA. And the reason I use FHA, a lot of people that don't meet the requirements or have 5 to 10% down will have PMI on an FHA product, and depending on the home value, right? So now the PMI, let's do that, 1,200. HOA, I don't know if you have an HOA or not. Let's leave that blank. Other costs, I don't know what other costs could be associated, but let's leave that blank, right? So now, guys, look at this. A home value that is 500,000, a total out-of-pocket cost, you'd be paying 3,600 a month. 3,600 plus, let me move myself over. 3,600 a month plus that 200 I told you about. Because that the bank now, they're going to say, well, you don't have the 28,000 to put down. What we'll do is we'll take the 28,000 and divide it amongst 30-year loan, which will give you a new loan monthly payment. Mind you, if you had the 28,000, your mortgage would have been 3,600. But since you don't have it and you're taking advantage of the down payment assistance program, your mortgage is going to go up $200. So now that's $3,800, right? Guys, some of you might say, Sam, that seems a little overburdened. Why would I take that that product when it seems like it's giving me a higher payment? Guys, my channel is about educating the person living paycheck to paycheck. You're trying to figure out how to get ahead. If you look at my other videos, I break down how home values increase every year and the 3 different variables that cause home values to go up, right? Now, if you didn't look at that other video, I'll try to put a link in the description, but I'll do a small little simple one here. If your home value is 500,000, depending where in the state you are and what county you're in, right? It goes up 4%. So now if you bought a house 4% January, that means 1 year will pass, your home value will go up 4% in a year, $20,000. Now you might say, well, yeah, that goes out. Now, guys, you can borrow from that. That means in 1 year, let's just say you sell the house in 4 years, you would have made $80,000. Yes, the person living paycheck to paycheck. Now, you probably was renting for $3,000. After 4 years, you get your security deposit back. And now let's just say you bought a home the Sam way with mortgage math. After 4 years, getting 20,000 every year, your home value goes up. Let's say you're leaving or you want to borrow from it. You're getting $80,000. Guys, now here's another thing I'm going to add in because I'm trying to convince you to buy a home and to buy it now, right? Now, let me show you something that it's not part of my channel, but I will put it here because I want to educate you guys, right? And it's opportunities you guys don't know you have that option. Now, let me show you something. Look at this. Dunkin' Donuts startup cost, right? Now, this is where if a person wants to buy a Dunkin' Donuts, yeah. Now, anyone would know, like, man, if I could buy Dunkin' Donuts, I have that money laying around. Why not? Let's look into it. Let's scroll. It says, where is it at? Breakdown of estimated cost. It said, where is it at? Okay. Key financials of operational requirements. It says you will need a net worth requirement of 500,000 and liquid assets requirement of 200,000. Now, remember when I told you if you buy a home that's 500,000, right? Now, guys, there's 3 different reasons a home value can go up, right? Now, if you buy the house today, you will be worth 500,000. Now, with the 4% of a home going up every year, I told you that's 80,000. That means in 4 years from now, you'd have bought that house, your net worth would have been 500,000 and your liquid cash you would have had is 80,000. Now, guys, sometimes there's some people that buy a house 400,000 and it goes up 200,000 in 3 years. And you would fit the variable in order to buy a Dunkin' Donuts. Now, this is information a lot of people don't know because you don't have 250,000 laying around. Now, mind you, my video is about buying residential and commercial real estate, right? Look at this, guys. It says a single Dunkin' Donuts franchise owner estimate annual income for the year is 100,000 to 124,000, guys. What does that mean? If you were supposed to buy a Dunkin' Donuts today, Dunkin' Donuts, they can't promise you, but they're doing it's called conversions of how much you could actually make and how much our other franchisees are making. If you buy a Dunkin' Donuts today, in 1 year, it can not promise you, but it can say, listen, you can make anywhere from 100,000 to 124,000. So guys, a lot of you might hear other people say, don't buy a house now. Wait, I'm gonna let you know the disadvantage to that. You're missing out on the equity part of it and the comps in the area part of it. And you're listening to other financial maybe gurus. The information they do know is about 50%. Maybe the information I'm telling you is a 10%. If you can put all those information together, it can benefit you guys. So now I'm telling you, buy a house now with mortgage math and knowing different things, right? So guys, like I said, this was a 2-part video on why you should buy a house with the down payment assistance program in order to get a home and what's the benefit of it. So 4 years from now, or maybe less, you guys might buy Dunkin' Donuts or take that money to do investments for your family, your friends, your financial future, right? So guys, thank you for coming to my channel and I'm glad you're learning, guys. Take care.